Robert Kiyosaki always talks about, the author of Rich Dad Poor Dad. He talks about the rich don't work for money. And with this whole concept of the rich don't work for money, a lot of people always shrug it off as like, yeah, it's easy for you to say because you're rich and all that. And it talks about the money habits. It talks about the way that you look at a business, the way you look at investing. And this is, I think, an issue that a lot of investors, a lot of people are missing because they're being so transactional that they're not focused on building something that's going to actually sustain and actually building a business. And it's always been said with this analogy that's it's like planting a seed and then going the next day trying to eat it. You know what I mean? It's like you plant a seed, you got to nurture it, you got to take care of it, you got to let it grow. But the problem is, like, people jump into a business, jump into real estate because they're like, oh, I'm gonna make money, I'm gonna crush it my first year. Look at this guy, he made 100, 200 grand.
Well, I mean, it's
in
not
their
just real
first year.
It's not just real estate too. I mean, it is like the stock market. It's anything
Everything.
to where it's like,
Yeah.
if you just put some money in the stock market and you let it ride for a long period of time, just like real estate, you're going to be far better off than if you're just like, I'm trying to make these base hits to get super rich really quick.
Yeah.
Like that doesn't work that way. Patience is a true virtue when it comes to making money and building wealth.
And the thing that you and I have talked about so many times is that if you don't have the patience, and this is going to go into pretty much like 3 big ideas that we want to share with you on this. And with the first one being is why you shouldn't quit your job to go into becoming a real estate investor, right? This we hear all the time, especially the bigger pocket crowd and everybody. Every time somebody says, even on Facebook, I'm going to quit my job and go full time, everybody's like, oh my God, yay. And I look at them, I'm like, oh my God, you're an idiot. Like beyond an idiot. You haven't even done anything yet.
Yeah.
Yet you're sacrificing pretty much like that one thing that you have that is consistent for something that you don't even know if you're going to succeed at.
And getting your real estate license does not constitute, well, I got my real estate license. It's like, no. Like, it's having a client base. It's the knowledge around what by getting a real estate license does not act, you don't know how to do real estate. It's like, it means you can pass a test. You can memorize the information, you can go pass a test. That's all that means. When it comes to getting your license, like that's the first step. You're in the right direction. But just because you got your real estate license doesn't mean you should go quit your job, because you're not going to start making commissions. You're not going to start making 50 grand, 70 grand, 100 grand your first year just because you got your license. Nobody shows up with a list of clients and says like, I'm ready to list my house. Like, very competitive market where like you need to build that business and that reputation and those habits, and you need to understand the knowledge around that. And like, getting your license doesn't teach you that stuff.
Well, and how high is the turnover in real estate, right? I mean, we've seen it since we've been in this. How many people start, they're all gung-ho, right? We're going to crush it. We're going to kill it. Oh, I'm so motivated. I'm so happy. I'm so excited. Look at this. Look at that. I'm going to do this. I'm going to do that. Until they actually start doing what they need to be doing, because they're starting from ground zero. And guess what? From ground zero requires you to do all the shitty work that many people do not like to do. All the cold calling, door knocking, getting cursed at, getting rejected, all the headaches, all the crap that people don't want to deal with. And as soon as they start hitting that, all of a sudden, well, I needed to take a break, and I needed to do this, and I needed to do that, and I can't. And then it's like, all right, yeah, you're not gonna last. You understand? Because this is not gonna get easier. The more you grow in this business, the more stressful it's gonna be. So if you can't embrace the stress, and kind of like I like to say, if you can't embrace the suck, I don't know where I heard it, but I love the phrase of it. It's gonna become, you're not gonna last. No. And then you're saying, oh, let me quit my job, something that's actually providing me the income to sustain my life, to eat, to survive, to go after something that after you start doing it, like, man, I see these people and I was like, man, you're really kind of screwed right now, because you quit a great job, you quit whatever you had to come after something that now you hate doing.
Yeah.
So it's one of those things that's like, you got to be very smart. You got to think about it. You need to think about, like, how are you going to survive? I did a whole episode, and I'm going to link it before. It's called Before You Quit Your Job for Real Estate Investing. And it covers like what you need to look at, because if you're going to do it, do you have reserves to last you, I don't know, a year? You know what I mean? Like it takes care of not just your living expenses, but your marketing, your real estate business, because it costs money to do.
Well, and it's like you need to understand the financing of real estate too. It's
Mhm.
like you need a W-2 income to qualify for loans. Like unless you're paying cash for stuff, and then it only goes so far. Or you plan on using commercial loans and stuff like it, which are not your 30-year fixed rate, 3% interest loans. Like, no, they're like 20 year, and you have 5-year ARMs and 4.5 to 5.5% interest rates. So it's like you got a whole different level of competition and financing style that your general public does not understand.
Yeah.
Or doesn't know. So like that W-2 income is a huge thing. I mean, that's definitely something I think we did one about, like probably in that one before you quit your job, to where it's like, there's a lot of things you should do that I wish I would have known before I quit my job in 2015 to move into real estate full time. Looking back, I'm like, damn, I would have just done these things before I quit. That would have been beneficial 5 years down the road. But at the time, I didn't know.
Yeah, and even for myself, I mean, I grew up in real estate. I grew up in construction. I grew up doing this. It wasn't a huge shock doing shitty work for me. Like, I grew up doing shitty work. You know what I mean? I was an immigrant most of my life. So, yeah, we did all the shitty work. So, and it never scared me to do the cold calling, to do all that, all the stress, everything. It never scared me. It never worried me. But there's people that just can't. And also having your job, like you said, besides the W-2 income, that's how you pick up rental properties. I mean, we have friends of ours that are real estate investors that are killing it, even though they have full-time jobs. You know what I mean? They're killing it because their job supplies them with a stable income and credit to pick up as many houses as they want to pick up.
So this is not little bit of knowledge, like the knowledge, like once you understand that basic concept, and you get your own finances right, like you can exponentially increase a portfolio, increase your wealth in a very short period of time. Once you just gain that knowledge, like there's still a lot of hard work that has to go into it. But once you understand the basics of it, like you can start buying properties. Then it becomes the management style. Then it becomes the type of housing you buy. Then all the other stuff comes through. Yep. But you can get into the level. Everyone's like, I just want to buy that first property. You can get there very quickly if like you understand the basics, you have a good job, you have some savings, and you can find a decent deal with the numbers make right that you can learn with.
Yeah. Well, and then also like the other point that we've covered before is people are going to quit their job, right? And they're going to get into real estate, but don't worry, my expenses are taken care of because I'm going to do the bigger pockets model and house hack, right? And we've talked about this so many times because it's just one of those things that's like, bigger pockets needs to stop like pushing this so damn hard. And they need to focus on like, there's a lot more to this, right? Like house hacking in San Antonio is virtually impossible. You cannot find multifamily homes right now you can't even find multifamily homes in a decent area of town that cash flows. Because the investors that own the multifamily homes, they're not letting them go at a reasonable price. They're letting them go at a price that's like market value, and you still got to put repairs over that.
Yeah.
And then when you even finance that, your mortgage is way more than whatever your rent is going to produce. And we went into great detail on house hacking and everything on how you got to protect yourself. But you look at these things, and it's like, there's so many unknowns. And the biggest one is your lack of knowledge and experience, right? It takes a lot of experience. That's one thing that I always tell people, even when they come to us that they want to learn real estate and everything. It's like, look, you can buy the most expensive course in the world. You can buy all the books you want on real estate. You can listen to all the podcasts. The one thing that you can never pay for is experience.
Yeah.
Experience, you need to actually experience yourself. You need to go through it. A way to do this is, yes, you can partner with people to learn from their experience and kind of absorb some of their experience. But overall, like you need to put that time in because we always see it time and time again. They get into it, and because they have no experience, they don't know what the hell is going on. And then all of a sudden it's like, man, I can't find any deals. Man, I can't find a project, or I just lost 40 grand on this last deal. It's like, well, yes, you don't know what you're doing. But I quit my job. Sorry to hear that.
Yeah.
You understand? Like I think there's a more cautious way of going about it to make sure that you're not being so ballsy to just let me quit my job. I have no savings. I have nothing, but I'm going to do it in this industry that I know absolutely nothing about.
Yeah.
It's like not the right way to approach it.
Real estate industry has, I mean, I'd love to hear, like, compare it to other industries of like the amount of fluff that is sold in this industry and why that is. Like, there's a lot of what do they sell? They sell the steak, or they sell the sizzle, not the steak, kind of thing. Where, like, I think there's a lot of that stuff that goes on in real estate towards like the house hacking. Like, why does Bigger Pockets push it? Because it sells. Because it's like I'm moving to duplex. I mean, it does. Like, just listen to the pitch.
Of course.
Like, it's like you move into one unit, you rent the other units out, and it pays for you, and you live for free. Like, oh yeah, who doesn't want to do that? The problem is like everybody knows that, so those prices reflect that, and that is what buys those things in. Because it's also like when it comes to like institutional investors or investors, like investors go after multifamily, so those prices get bid up very quickly, and especially in the market right now.
Yeah.
To where it's like individual homeowners, your end consumer usually doesn't want to go live in a duplex. They don't want to live in a quadplex. I mean, you just look at the application permits for small one-to-family unit complexes. Like, they're basically non-existent. Like, it's a perfect example. Like, if you look at the last market analysis I did for the 4 metros, you look at the number of unit permits for 2 to 4 unit builds. I mean, there's basically non-existent compared to single family homes and large commercial properties as far as multifamily units. So what housing stock of your 2 to 4 units are available is extremely expensive because nobody's building it and your end consumer doesn't want to buy it.
Yeah.
So it's usually an investor that's buying it. So these prices get bid up very, very quickly.
Yeah. And with that, with house hacking, those investors are picking them up that are putting in that money. They're not house hacking. They need both areas to rent just to cover some of the mortgage, not all of it, because they're probably putting a large amount of money down, but they understand that eventually, appreciation is going to catch up. Everything's going to catch up because of where it's positioned and all that. But if you don't have that kind of revenue and you're trying to house hack something like that, you're going to be in a huge, huge world of hurt when that comes through. So the next big idea is like, who are the ones that work for money, right? These are the people that are working for the money, and it's your wholesalers, your flippers, your buy and hold investors, your note buyers, your lenders. These are the people that are all working for money. And a lot of people right now are probably thinking, wait, hold on. How's a buy and hold investor working for money? Like, that's the whole point. It's passive income. Not if you're not doing it right.
Yeah.
If you're not buying a rental correctly, you're not doing the analysis correctly, you can buy a house that's like, yeah, it cash flows, but you never factored in the amount of repairs that house actually needs to be worth what even you paid for it. So it's like it cash flows right now, but when you need to go ahead and turn around and sell it and you need to actually do the repairs, you're underwater. Well, it doesn't make sense.
And I think that's a perfect point to where, like, buying hold done wrong can be even worse than flipping. So where, like, there's people that I've met or heard about, or how easily it can, towards like they have a good job, they have good savings, they discover real estate, and they jump both feet in and buy house, like very quickly, buying from these big wholesale companies, turn around and renting them, not understanding what a house is and how they act and how they perform and what property management is. They think it's like, oh, I just buy this house, put a tenant in it, I don't have to do anything anymore, and I hire a property manager, we're done. It's like, no. How's the foundation? How's the electrical? How's the roof? How's the air conditioner? To where, like, if all those major components are crappy, you're going to get a crappy tenant that wants to live there because people themselves don't want to deal with that. Like, I had a conversation with one of our tenants recently, and they want to renew again, and their lease isn't up for another like 8 months. He's like, I'm going to tell you right now, we're renewing again. He's like, because like, I enjoy renting from you. You get it. You understand it. It's like, I don't want to run the risk of moving to a house that I don't know and a landlord I don't know. Because I know there's a lot of people that, like, a landlord to say, like, okay, you buy a house, you leverage it up, and you're a spreadsheet person. You're tracking your return. All of a sudden, the AC goes out. And your AC guy goes out there's like, man, this unit's 20 years old. You really need a new unit. It's going to be $6-7 grand to replace that. And you're like, I don't want to spend that though. Can we Band-Aid it? Can we do something? It's like, well, I can put a new compressor in it. I mean, that'll run you like $900.
And then it breaks every other month, every other week. It keeps breaking because all they're doing is putting Band-Aids on all these issues.
Yeah, and then like the same thing with the roof, same thing with the foundation, or it's like, oh, the foundation, I'm having plumbing issues. Like,
Yeah.
well, yeah, your toilet keeps backing up. Like, yeah, you're gonna have problems. And I mean, this is a firsthand experience. We fell into this to where, like, luckily the tenant was cool, to where we redid an entire house in the foundation, lifted everything. We knew there was gonna be problems. We fixed all the plumbing underneath, everything in the house of the new stuff held. We just didn't check from the exit of the house to the street. We're like, oh, I mean, shouldn't have to worry about that thing. But the plumbing kept backing up. We're like, what is going on? Finally, we got somebody out there, ran a camera down it, and we realized the whole front line had a huge drop in it to where it was like 3 inches of water sitting in the line, and on a 4-inch pipe, so only 1 inch for air to flow through, to where there was a family of 4 living in the house, and using it, it would continually get clogged up because it wasn't flowing out to the street.
Yeah.
So it was backing up to where we had to spend, luckily we own a house on either side of it. We did all 3 of them at once to bring the cost down, but that could be $4,000, $5,000, $6,000 and your house not being usable for 3, 4, 5 days while they're redoing that. So you got to put your tenant up to where, like, you got to understand housing performs. To where if you buy a bunch of really cheap, what seems like great deals, cheap housing from these big wholesale outfits and things like that, it's like, they're not good deals. They're not cheap deals because they're going to get very expensive, very long, and over the time. And then you realize, like, you're not bringing in the cash flow to where you're having to dump more of your active income back into these properties. And it's like, and mortgages don't go down over time. That's how you can work for money being a buy to hold investor.
100%, because you got to keep that money coming in and take care of these terrible investments that you just made. And then it's the same wholesalers and flippers. To me, they're kind of in the same realm because we see this time and time again with wholesalers and flippers all the time is that, you know, they get one, make some money. Okay, go get another one. They get that, okay, go get another one. Okay, go get another one. Oh, we got to go get another one. So you look at all this and it's like, yeah, you have to constantly be getting more and more deals, and you're always looking for that. You're kind of like a junkie at that point. Yeah. You're always looking for that next hit, right? Yeah. And that, all you're doing, if you think about it, like, you are literally busting your ass time and time and time again to find that next hit, right? And it's the same thing for lenders and note buyers. It's the same thing. They're always looking for that next hit. So the third big idea here is who is actually building wealth. So as a real estate investor, right, we have your wholesalers, your flippers, your buy and hold. So if all of them are working for money, then who is building wealth? And to us, it's very simple. Those are actually focused on building systems around what they're doing. So if you want to flip houses, or if you want to wholesale, or if you want to buy and hold, you want to lend, you got to put systems in place. Something that makes sure that you're checking and you're making sure that you're not buying bad investments, that you have the right people lined up, that you can do this time and time again to a point where it's like you don't even have to work all that hard for this to start producing on its own, right? Where they say, the rich don't work for money. It's because you are putting the systems in place that are helping you generate the deals, helping you generate everything that you need to generate. So therefore, it's like, okay, yeah, now my system is working for me. Now my system is generating me revenue and generating me what I need from this business and all of this. So it's just, you got to focus on building systems. You got to focus on building a repeatable process. Right? If you can't repeat this process, you're just working for money. If you can't repeat this strategy, you're working for money, right? Because you're doing it once, chances you're going to be able to do it again are going to be very small. It's going to be very different. If you can't repeat it, you're just working for money. And the problem is like we see a lot of times, right? The market changes. Things change. Things become more expensive. There's shifts like we've seen this past year. And because you were doing something that wasn't repeatable, now all of a sudden your whole business model went up in flames. And it's like, so what are you doing now? I don't know. I guess I'll wholesale some houses. What do you know about wholesaling?
Yeah.
Nothing, you know? So, and we've seen this with so many investors, buy and hold investors, fix and flip, lenders. They didn't have repeatable process on how they found their properties, how they managed them, how they vetted them, how they, how they even found the investors they wanted to invest with. So if you're not having a repeatable process, you're just not going anywhere. You're always going to be in the same spot over and over and over. And also, you got to focus on building teams. Right? If you don't put a team around you, if you can't build a team around you to help you with all these areas, I mean, we're talking about it now, how we're hiring people, we're bringing people on. And even for our properties, yeah, we do self-managing because we've seen what it is to hire a property manager and it doesn't make sense a lot of times. So we prefer to self-manage, but we are going to have to bring in somebody to help manage these properties. So what are we doing? We're building the systems, we're building the process, so that way we can just hire somebody, plug them in, and say, here's our process. When somebody calls with a complaint, here's the process.
Well,
here's the system.
Not just here's the process, like here's the people.
Yeah.
Like even more importantly than the process is the people to do the work in a way that you trust and can do it efficiently and effectively. Because tenants hate nothing. I mean, just my personal experience, or just think about it for anybody. Like your AC goes out in July, and it takes your landlord 2 weeks to replace the air conditioner. How pissed are you going to be by day 2?
Yeah.
And like, how good are you going to take care of that property moving forward if the landlord doesn't give a damn about the property or you?
Yep.
So it's like, we have our teams, we have our people. Like when something goes wrong, it's like, I can get somebody out there ASAP and do it in an effective way. Because if you don't have those teams, you can always get somebody out there in 24 hours. It's like, is how much you're going to pay to get that person out there in 24 hours. And now if I got a consistent team of people that I got my plumbers, electricians, ACs, like your major components that if something breaks, I got to get somebody out there right away. Otherwise it's going to cause major damage to not only the house, but our relationship with that tenant. To where if I got something backing up in the sewer or something like that, like if I don't get somebody out there in 24 hours, it's really going to, like, people don't like the smell of shit in their house. And I can get somebody out there for emergencies, but they're $200 just to show up, let alone they're going to run a snake down the line. That's another $300. So a $500 repair. My guy does it for $100. I can get somebody there in 24 hours. Yeah. So like over time, I need those people, because otherwise if you do everything on the fly, emergencies every single time with new people and build no rapport with like people that can actually do the work, like it'll eat any kind of cash flow return right out of your pocket so fast.
Yep.
It's like you have to have a reliable team.
And why we've gotten burned so many times with contractors is because time and time again, with every project that we do, we're always trying to build our team because we're thinking long term. We're not thinking this project. If we keep thinking on every single house, oh, I just need this project done, I just need this project done, the problem you have is that then that's all you're going to ever have work for. You're not going to be able to build relationship with contractors that you can depend on, with people that you can always count on whenever you need something. Like you're not building that because you're always burning and churning contractors, burning and churning investors, everybody. And it's like, how can you grow that? How can you scale that? How can you even implement this business model or system in any other city if you are so involved in every single step? Yeah. Right? We've heard an investor friend of ours that the way they manage a rehab is they literally plop a chair in front of their project and work from that chair because they need to manage. I'm like, then that's fine. It works for them because of the business model they have, and that works for them. They're not looking for scale or anything like that. But you're always working for money at that point. You understand? Because you got to be at every single one of your rehabs. How many rehabs can you manage at that point? Right? Yeah. How many deals can you do? If you have opportunities in other cities, other states, you can't do that everywhere you go.
And it's a lot of trial and error. Yeah. A lot of trial and error to find these people, these core people that are there. Because, I mean, and that's what I would say, real estate and everything can be so dangerous just jumping both feet in, because like it takes time, resources, money, and failure after failure to find these people, to learn these lessons, to where it's like, you're buying one house, don't go out and buy 5 right off the bat and just 5 deep and then just keep going like ready to go. It's like, it takes a minute to learn these things.
Or if you're going to work with a contractor, don't jump in on 5 projects all at once with the same contractor. Yeah. Because then it's like, you don't know what kind of work they do, right? And now you're dependent on them for the next 3-4 projects. And if they suck and you're tied to them and you bought
That's
them,
like, and it's saying, like, and you better know how to replace contractors
Yeah.
quickly and efficiently and effectively. It's like that is the portion of like the quote unquote building teams aspect of it. It's not only just for your business, like your contract team, your field team is probably the most important piece of making sure your investment holds. You can have all the back end office work you want, but if you don't have people to do the work to actually make the asset perform and people you can trust, like it'll sink you real quick. Because a lot of times we're using big dollars, we're using big leverage to do these things to where like leverage is great, but it's also extremely dangerous because it can go backwards and unwind extremely fast.
Yeah. Well, and especially in this market, I mean, right now there's so much easy money out there that if you don't understand how to work with that money and everything, you get accustomed to easy money. And then you don't realize, like, when the market changes, when strategies change, and you got used to that easy money and now you can't find it anymore, because usually when the market's changing stuff, that easy money is gone.
Yeah.
Because they're the ones that are scared. They're the ones that, because they're not investing with any intelligence.
Well, I mean,
they're
that's what
just throwing money.
that's what causes crashes.
Exactly.
Is when that liquidity disappears and nobody wants to lend their money because I think prices are going to continue to fall.
Yeah.
Like that's what makes things fall even faster.
Well, and then the last point here is focus on strategic partnerships, right? And that's something that you and I are big proponents about. We've always done partnerships pretty much on every area of our business. And we were actually, this past week, we were doing our quarterly, rundown of our business, our strategy session, kind of seeing where our business is, where it's going and everything. We were talking with a good friend of ours, Logan. We went to his office space, amazing house. He
cool.
bought this massive little mansion in Government Hill of San Antonio, and gorgeous property. I mean, really cool spot. And we were just talking about like hiring and all this, and we were telling him about how we found a rock star of a acquisitions guy here in San Antonio, and we offered him a partnership. Like, let's open up a company, we'll split it evenly, and let's run this company to acquire, flip, do everything. Like, you're killing it in acquisitions. Acquisitions is a full-time thing. And his biggest holdup is like, well, yeah, but, the percentage split. Like, yeah, it's all even. Yeah, but, on a $10,000 deal, that means, and I'm like, the fuck are you talking about on a $10,000 deal? Like, you're not thinking strategically, you're thinking transactionally. My next deal. And it's like the whole point of partnering with somebody and doing a strategic partnership is for volume, for scale, not for what are we going to do on this one deal, right? It's that, no, instead of you now doing, let's say, one flip, now you can manage maybe 6, 7, 8 flips at the same time. You know what I mean? Instead of doing like one project, you could do multiple projects at once. And he was sharing with us how he did a partnership like that recently, and it's paying out massively for them because now they were able to combine their knowledge, their resources, their capabilities, and they're crushing it. They're doing so much more than they were doing before. And it's like, yes, that is the point of a strategic partnership.
Yeah.
But when you think so small, like flippers and wholesalers do, and everybody's like, no, I got to do it. I got to keep 100% of everything. It's like, do you want 100% of a grape or 50% of a watermelon? You know what I'm saying? It's like, you can have 100%, but it's always going to be of a very small place until you build the teams, until you bring the people, you build the systems. Until you do all those things, you're always going to be working for money.
Yep.
So that's kind of our little rant on why the rich don't work for money and how it is that you can kind of get there yourself is by thinking this way. If you're going to be building a business, if you're going to be getting into real estate, you got to think about how is it that I can do this, and everything that I'm doing, how can I go building a system around this? How can I scale this? How can I branch this off somewhere else? By doing that, it's just going to be, you're actually going to build something that's going to be sustainable and not something that as soon as the market shifts, you're out of business. So make sure you check out this episode over here on what to do before you quit your job to get into real estate, and check out all this other content down here that we also put out every single week. And if you're enjoying this, hit that subscribe button. It means the world to us, and I'll catch you guys on the next episode.